James Gautrey of Schroder Investment Management. He helps run about $17 billion worth of assets, has been the bank's technology and telecom specialist for the past 10 years. This repositioning in the marketplace, it's all about Apple, isn't it? It's all trying to steal a march on them.
Yeah, I mean, Apple, as we said, has just totally dominated the tablet market. We've seen HP come in, we've seen the likes of Samsung, Research in Motion, Acer, Asus. Everybody's trying to get tablets in. It's the big growth area. Nobody's really doing it. It's all Apple's game.
What happened with HP's tablet?
Basically, they had an inferior product to Apple's, which they tried to sell at the same price, and nobody wants to buy it. You know, the iPad 2 was their biggest problem. They didn't have much software for the consumers to buy, and then they tried to sell it at the same price. The consumer walks into the shop and they say, I'll have an iPad 2 instead, thanks.
And apps are pretty important as far as that growth is concerned.
Critical.
The difference was huge.
Absolutely. I mean, the touchpad for HP had around about 300 to 400 apps available for it. Apple's iPad has over 100,000 apps available, and software is really what you're using it for. The hardware is very commoditized, that's standard. It's all about software.
It's also about sexiness and image appeal, isn't it? And that's what
right.
Apple seems to have managed to bottle up, basically.
Yes, totally. Yeah, I'd like a bottle of it if you've got one, Peter. Yeah, no, I think it's absolutely right that Apple just has that absolute huge brand kudos at the moment. It's an aspirational brand. It's almost like a luxury good company at the moment. And other companies like HP, you know, Samsung, even Acer, they're good, but they just don't quite have that pull for the consumer.
And that's why HP is trying to get rid of the PC business, because a PC is a great big lump of plastic on your desk.
Yes.
And you can't do much, presumably, to make that groovy.
Yeah, no, you're absolutely right. They all kind of look the same. We don't really care what box we've got underneath it. And as you say, in the consumer side, it's about sexiness, it's about great products, and Apple's killing everybody in there. So what we're seeing with HP is probably stepping back from the consumer angle, refocusing on the enterprise where they do have some skills.
Does selling off the PC business, to what extent is HP really going back to its roots, I guess?
Yeah, I mean, it's an interesting question. I mean, I think as we're going to see this company reposition itself very much along the lines of IBM. So, you know, that transformation is kind of going to be HP's playbook for the next few years. So we're shifting out of hardware, we're going into software and services, and hopefully the stock will re-rate as IBM's did. HP is trading on around 6 times earnings today. IBM is 12 times. If they get it right, there's a lot of upside.
Now, this autonomy deal, the whole focusing on software, there must be real dangers here, because technology and taste can change in a heartbeat. Something can come in as Apple did,
yep,
and steal a march and everywhere else. So is this, as far as you're concerned, pretty good strategically? I guess it worked for IBM.
Yeah, and I think with autonomy, we're talking about a different type of software asset here. Yeah. This is a pretty unique technology. There aren't really competitors. There was a company called Fast, which Microsoft bought a few years ago, kind of disappeared into nothing. But autonomy is a very, very unique asset. There aren't competitors out there. Unstructured data is a huge, very interesting area. I think the chances that that gets blown out of the water from something left field in the next few years is pretty low. So in terms of that rationale, you know, it's a good deal.
What does it say about the markets? And my goodness, we're in very volatile times, that
yes,
a $10 billion deal is affordable and doable.
Well, I guess, I mean, for US technology stocks, we've seen them building up huge cash piles over the last few years, and part of that has been around a tax strategy. So most of them are running with kind of 15–20% tax rates, and that's all due to some clever offshore tax planning. The net effect of that, however, is that the cash sits offshore, and if you bring it back, you pay a lot of tax. If you buy a business, you don't pay the tax. So all these acquisitions look a lot cheaper. So perhaps where you think, yeah, volatile market's not the time to be doing it in, a lot of these companies are thinking, well, actually, we're getting a 1/3 discount because we're not paying the tax. So we could see more.
OK, we shall see. James Gautrey, thank you very much.
Thank you.
Indeed.